When you're evaluating a company and you know that a year later or 2 years later, the administration is going to change and things can be completely different, like how do you think about that in terms of an investment?
I think you always have to be prepared, both looking at what is the current regulatory environment, but also how could that change? And some of the things that government does are actually based on statute, right? So it's enforcing the law. And then some of it is how different administrations approach it. You're likely to see in a Trump administration, for example, probably a less aggressive FTC. I also think Trump's tariffs could potentially be impactful, depending on what he ends up doing, how he approaches foreign investment, right? There's a lot of money in the sovereign wealth funds right now. And this year, we're going to see Congress considering major tax, which, we're talking hundreds of billions, if not trillions of dollars that are going to be at play here, and policies that are going to be written that have significant impact on companies, both big and small.
Welcome to the latest episode of High Stakes. I'm Paige Soya, the managing partner of K Street Capital, and this season is all about the inside baseball of the venture capital industry. And today's episode is going to be about how governments impact the venture capital industry, and we couldn't have a better guest on to talk about this. It's one of our LPs, Bruce Andrews. So before we get started, Bruce, why don't you introduce yourself and just share a little bit about your background?
Sure. My name's Bruce Andrews, and I have spent the last 30 plus years at the intersection of business, public policy, and politics. And I've been very fortunate to work in some really interesting roles, both in government as the Deputy Secretary of the U.S. Department of Commerce, as the General Counsel for the Senate Commerce Committee. When I was a kid, I started out as a very, very junior staffer on Capitol Hill, so I literally have worked my way from the bottom up. But I've also been really fortunate to be in some fascinating corporate roles. Most relevant to this conversation was the time I spent at Softbank in the heyday of the Vision Fund, but also I ran government affairs for Ford Motor Company. I most recently was senior vice president and chief government affairs officer at the Intel Corporation, so living both through the funding of the CHIPS Act in Congress, but then also through Intel. We successfully landed $7.8 billion for Intel. So I've been, very fortunate throughout my career to see how policy and business intersect.
Very cool. You have such a diverse background in that intersection of business and policy. And just to clarify, when you were at SoftBank, what time period was that?
So I was there from September of 2018 through September of 2021. So sort of from early in the Vision Fund, which was interesting because I think Massa realized the importance of government affairs on multiple levels. But then, through watching some really fascinating and being part of the investment process, some very fascinating companies, and then also helping a number of those portfolio companies as well.
Yeah, that's great. It's been very interesting since that time period to see a lot of the major VCs shifted some of their offices to DC, or at least having an office in DC. It's not just SoftBank. You've got Sequoia now, Andreessen, and a number of them, because I think it's just become more relevant now how important it is to understand the intersection of policy and regulated markets and how it impacts the companies we invest in as venture capitalists.
No, I think you're 100% right. And I think what the industry realized is, the government really can affect, the VCs themselves, but also the portfolio companies in big ways. And exactly. I think some of the bigger, more sophisticated players also started taking into account, hey, what are the regulatory and geopolitical issues we need to be cognizant of as we make, particularly in SoftBank case, but also Sequoia or an Andreessen, some significant investments in understanding how government policies and also geopolitics, which have become much, much more impactful these days, particularly if you have, for VCs who have, investments overseas.
Yeah, exactly. I also just want to say before we get into some of these issues that I think are relevant now, and would love to get your perspective on them, is we invest entirely in the U.S., and the U.S. is the primary market for venture capital for a lot of reasons. And on Thanksgiving every year, the one thing I say that I'm the most thankful for is being born in the United States, being an American, and being able to do business over here, because the policies that have been put in place by the government made this a place where we can have venture capital, and our dollars are are significantly de-risked in investing here versus in a lot of other nations and really around the world. So, and also like I've dabbled myself in investing abroad, and I've learned very firsthand that a lot of the policies that impact startups are very important. Like, I mean, even in Europe, which is probably our closest counterpart from a venture capital ecosystem standpoint, their ability to hire and fire quickly is just not there. Like you can't pivot quickly, you can't change your team quickly, and that's really hard for early stage startups. So all that being said, as much as we may complain about things and we want things to be better in the U.S. and they can always be better and we strive for improvement, I love being here and I think it's a great place to do business and it's a great place for venture.
Well, and I think if I could make one point on that, because I think that, just the last couple of years have been interesting, because, a number of big Western companies have invested in companies like Didi and ByteDance. And, for there was a period where the educational tutoring companies were really big in China. And then basically one day the government completely wiped away the industry. And there were companies that had made, multi-hundred billion or even billion-dollar investments in those industries. Didi was a good example where they weren't allowed to go public and they were about to do an IPO and then the Chinese government changed it came. I mean, ByteDance, we're all sitting back and watching what's not only going to happen with TikTok, but is ByteDance, will it ever actually be able to go public? Timing of this conversation with the meeting Xi Jinping did yesterday with a whole bunch of Chinese big company leaders, tech leaders, is interesting because he's kind of sending a signal, after years of sending a signal of, hey, look, the government and the party are in charge. Yesterday was sending a very different signal to say, hey, big companies, big tech, we love you. We need you to do more. So your point, the U.S. having liquid capital markets, rule of law really does make it a much safer and frankly, long-term, much more successful place to invest.
Yeah, absolutely. Well, I'd love to hear from you. Like, what are some of the issues that you dealt with when you were at Softbank that were important and how did they play out, I guess, over that time period?
Sure. I mean, I guess I would break it down into three categories. So number one was, what were the issues Softbank itself faced? And the good news is the company itself, one of the biggest issues was actually just being successful in getting the investments cleared as part of the CFIUS process. Because one thing most people don't realize is if a foreign company makes an investment in the United States, it's actually got to be approved by the U.S. government. And before I started at Softbank faced some real challenges in dealing with the U.S. government, partially because I think just the U.S. government didn't understand who Softbank was, what its commitment. The joke I used to make is when I would talk to people in Washington, most people thought Softbank was a Chinese bank, which it turns out is neither Chinese nor a bank. But as people learned that it was a Japanese venture capital fund, but there was some degree of concern by U.S. government officials about Softbank's investments in China. And in the same way they had about, it's been well documented the concerns the U.S. government had about Sequoia, some other companies. But what was interesting is at SoftBank, we had to go through the CFIUS process. So the first thing we dealt with is how to make the U.S. government understand who SoftBank is, and frankly, the company's commitment, Masa's commitment in the Vision Fund to making significant investments in the United States and getting those investments approved. And the good thing is, from when I started, we set up a program for how we evaluated all investments, and the U.S. government loved it. They looked at it and they said, wow, that's really smart. We like what you're doing. And so we went from having some challenges with the U.S. government to getting every one of our deals, and it basically became, something that was no longer an issue. The second category of things that was interesting, though, was actually helping the portfolio companies. Because one of the things Masa realized is if you're going to make $1 billion investment in the company, or in a company, you don't want the U.S. government to do something to hurt the company, or you actually want regulatory policies that are going to be helpful to the company's ability to be successful. So we spent a bunch of time looking at it. What are things that governments, both the U.S. and others, could do to help make the portfolio companies successful? And then the third part, which I actually really enjoyed and found interesting, was evaluating the regulatory and geopolitical risk of any investment. So, I would join the investment calls every week, and it was mostly the investment team, but, there would be a point where we'd say, okay, what are the either regulatory issues or geopolitical issues that could impact this company either favorably, right, so that you look for opportunity, or negatively, so you have to potentially play defense to avoid something being done that either reduces or significantly impacts the investment.
And this is actually an interesting question, because at K Street, as you know, we invest in regulated markets, and a lot of our investors, like yourself, have backgrounds in that, and that's a big part of our thesis and how we look at deals. And I think it's a bit unusual. You don't see, like, Softbank is one, we're one, but there aren't a lot of VCs that place a ton of, or historically have not placed a ton of importance on that layer. And I guess what I wanted to ask you is how do you think about regulatory policy impacting these startups when you have a change of administration? Like when you're evaluating a company and you know that a year later or 2 years later the administration is going to change and things can be completely different, like how do you think about that in terms of an investment strategy?
Sure. Look, I think you always have to be prepared, both looking at what is the current regulatory environment, but also how could that change? And from a Biden administration to a Trump administration, there are going to be a number of changes. There also will be some things that are continual, right? Because some of the things that government does are actually based on statute, right? So it's enforcing the law, and then some of it tends to be a matter of how different administrations approach it. So I do think you're likely to see, in a Trump administration, for example, probably a less aggressive FTC. Lena Khan took a very strong view on certain, Jonathan Cantor of the Department of Justice, who was the head of the antitrust division. And I think the jury is still out, waiting to see how does the Trump team, has Gail Slater view this differently, or does she view it similarly, and when we have an FTC chair. So, on one level, there's absolutely differences and sometimes fundamental differences in approach, but I think it's one of those things you just have to be prepared for, and you have to bake into your considerations.
Yeah, exactly. And I think for our audience, like when you think about inside baseball for this episode, it's like not even all VCs think about this, but it does come into play a lot with some of us. And I think it comes into the conversation all the time. Like for us at K Street, we're seeing, with the new administration and some of the executive orders that have come out, it's having an impact on our portfolio companies. And in some ways, it's having an impact that we don't know exactly what it is yet. So trying to figure that out and to make sure that the company is positioned the best that they can be to be successful in this new environment is really important. And it's something that I think, especially like as the companies get to be later stage and you have more dollars invested and they have a lot more to lose, it's a material consideration that VCs are starting to think about. A lot of them already have been thinking about.
Well, but companies are looking for exits, right? And so it feels like companies are sitting back and waiting on IPOs for now to see sort of where the market takes. And that's going to be something that'll be hugely important to VCs, right? What can companies do to make exit? What can the VCs do to get exits to start recouping some of their money?
Yeah. And what were some of the biggest issues, I guess, that came up? I guess let me take a step back. There's some direct issues that will impact specific portfolio companies in certain industries, of course, but not others. And then there's some like blanket issues that impact the entire industry as a whole, like you were mentioning about liquidity and having IPOs and that sort of thing. But I'm curious, like, what were some of the issues that were sort of like blanket things that were impacting venture capital in totality, whether it be like, I don't know, tax policies or other regulatory policies? And this can be current time, like what you think about it now, or what some of the things were that you dealt with at Softbank.
Sure. No, look, you took the number one thing that I was going to mention, which is tax policy, right? So watching, when I was at SoftBank, from the Trump administration, there was a major tax bill passed, to the Biden administration, who took a pretty different view on a lot of these things, right? And then this year, we're going to see Congress considering major tax, which, we're talking hundreds of billions, if not trillions of dollars that are going to be at play here, and policies that are going to be written that have significant impact on companies both big and small. So that is probably the number one thing I'm watching. I think how the Trump administration approaches antitrust policy, because I do think at times, and ironically, sometimes strong antitrust policies, we had some portfolios that was actually good for. Masa liked investing in disruptors, right? Like in companies that were going to be disruptive. Well, if you're investing in disruptive companies, sometimes actually having strong antitrust enforcement, like I can think back to when I was at SoftBank, we had one company who, basically was frozen out of the market by one of the huge, massive platform companies and was unable to get in. So they actually wanted to see stronger antitrust enforcement because that was going to allow them to unlock and to really build their TAM, for what they could do. But they were essentially blocked out by a big platform player who tied their products together so that it made it very difficult to obtain customers. So I think we're going to see a variety of policies. I also think Trump's tariffs could potentially be impactful, depending on what he ends up doing, how he approaches foreign investment, right? There's a lot of money, for example, in the sovereign wealth funds right now, that during the Biden administration, CFIUS was at time, the CFIUS Committee, the Committee on Foreign Investment in the United States. There were times that they definitely were a little sensitive to about which industries sovereigns could get into. And, it remains to be seen how President Trump approaches that.
Yeah, I think that's absolutely true. And going back to the antitrust thing, I mean, we're seeing, I think there's all kinds of chatter about that when it comes to exits as well, right? Because some of the companies that can buy other companies, sometimes depending on the policy, now they can no longer buy those companies. So you're not seeing the number of opportunities to exit can get a lot smaller depending on the direction of that.
No, absolutely.
Yeah. Okay, so I want to switch gears a little bit and ask you a couple of questions. The first one being, what's the most interesting inside baseball thing that you've learned about the venture capital industry since your time at Softbank?
So, it's funny you asked that. So one of the reasons I went to SoftBank is I really didn't know much about the VC industry. And I jokingly described it as going to get my executive MBA because I felt like it was a great way to go in at a senior level to be inside a world-class venture capital fund, but not having, sort of what I would call the traditional background of VC players. But, I found the most fascinating was dealing with the founders, and getting to meet some real characters, from these companies. And you realize that, being a founder is one part genius, one part courage, and one part insanity. And that, some of them are a little bit crazy. And, there's obviously, for SoftBank, there have even been movies been made about some of them. But, getting to meet some of these folks, and some who were the most, what's the right point? You would meet them and you would never have guessed that these people were hugely, fabulously wealthy, as a result of the growth of their companies. There was one, the first time I met Yiming Zhang, the ByteDance founder, I met him up in New York and we walked out and here's this guy, we'd met at a WeWork in New York, and we walk out of the building. And here's a guy, he lose any guy on the street in New York, not one of the richest people in China. And literally, if I had stopped somebody on the street and said, that guy is one of the richest people in China, they would have been like, yeah, buddy, get away from me. Like, no way. So I love the diversity of the characters. And one thing that made it really fun in my job is, I didn't know a lot about what they did, and wouldn't have been a great founder for a company, but they also didn't really understand what I did and my team did. So we had this great mutual respect because they sort of knew okay, what you do is important. They didn't really understand it, but it was helpful from their perspective to have somebody who could be, I sort of describe it as being a little bit of a cultural translator, right? Of translating the world of Washington or Brussels or Beijing, how things operate in capitals, to business people who all they want to do is run their business and not have government get in their way. Right. So that part to me was actually a lot of fun.
That's awesome. And did you feel like the founders felt like it was a burden having to deal with the government and having to have a translator to figure it all out? Or was it the other way around where maybe they were thinking about it opportunistically?
It was a totally mixed bag. Some was optimistic and saying, hey, if the government would do X, Y, and Z in policy, that would unlock a huge amount of value for my company, right? Like we had one company that was kind of in the environmental space who, there was a tax break they wanted to see happen in the tax legislation that could have been hugely beneficial for them because it would made the cost of their products much lower and frankly probably would have, just exploded their TAM. Others were like, hey, just keep government out of my business. They're going to cause problems for me. They're going to make my life difficult. And, I don't want whatever this regulatory policy that really isn't intended to capture me. But sometimes government acts in ways that then has incidental or unintended consequences that create real problems, especially to your point for small companies, because most of the founders, right, most small founders, most small companies don't have the money to invest in government affairs. It was one of the things that I think Masa saw quite wisely, which is we could build the value of the company and the investment by the work that our team did, but it was something they were never going to do on their own, right? Because they're trying to keep costs down, they're trying to be competitive. Frankly, they're trying to figure out how to get their company to market and really build their companies and then be ready for IPOs. And so we could bring them something of value that they really appreciated.
Well, that's exactly what I was going to ask you, actually, is like an example of how you would help these companies, because to your point, like they can't afford their own government affairs team, right? They can usually not, and depending on the stage, they can't even afford a single person in, like a single lobbyist, right? So, or even to pay the retainers for that sort of work for a really good person. So what you're saying is basically SoftBank recognized that and built the team out themselves, and then made it available to the portfolio companies, and that was like the full-time job, right, for a lot of people on that team.
It was at least part of the job, but what I jokingly called it GAS, Government Affairs as a Service, which is essentially we went out and, depending on where the company was, right? So for really small companies, we actually kind of helped become their government affairs team and help them to launch and help them. And we would take founders to meet with government officials. The next step was often, advising them on, hey, look, you need more help than we can provide you. But it also meant that it was probably big dollars for them. So that then became, here, we will recommend to you a lobby firm in Washington that you can hire. And, sometimes it was, you got a big problem, so you're going to go spend a lot of money on some big name firms. But there are also some really neat firms in Washington whose business model is to do more startup and early stage companies. And so they'll either they don't charge a lot in retainers, or in some cases they actually take stock and take equity.
Yep.
And so so sometimes it would be recommending when they really needed something that was more than our team could provide sort of reasonably. The next step would be a lobby firm, but then sometimes it would also be helping them hire a team. And there were companies where I did interviewing for them, right? I would go out and literally interview people for them or recommend and help them.
I think that's really cool.
And so
yeah, especially because these are like tech founders, right? I mean, they don't know the language of how to interview. Like you wouldn't know how to interview a CTO for them, right? So it's like to have that expertise and the network to connect them to the right type of person for the type of policy and the type of things they're trying to accomplish. That's really cool.
And 90% of the time, when they were hiring, that was it. We would come to them with 1 or 2 or 3 names and say, here are 3 people we have pre-vetted who will be really good for what you need. And to your point, they don't want to go out and they don't have the money to hire a headhunter. They don't want to go spend a huge amount. They don't even sometimes, to your point, know the questions to ask. They just want somebody who's going to be a fit with them and to fit into their program. And so, but we did a lot of that actually, and recommended some great people who helped, take a number of these companies to the next level.
That's great. But I think that's a good answer. I think for our audience too, just to understand how you answered the question in the beginning of this, of just the different personas of these founders and how interesting and diverse they are. Because in venture, it's it's our job we are really tasked with trying to find those people, really, because that's the most important. The founder in the beginning is the most important factor, and over the life cycle of the company, and their leadership and their ability to scale. And I think being able to identify that is one of the hardest, and also I think the most rewarding probably parts of the job for people who aren't in it. That's one of the special parts in venture capital, on a positive note.
Yeah, well, the good news is I didn't have to choose them. I just had to help them. But it's funny, because obviously,
And you got to meet them after they were successful too, usually, I presume, because it was a more late stage, right, the deals.
But sometimes they were, they weren't early, they were not the early rounds, but a lot of them still had, either they were becoming household names or they were trying to become household names. But yeah, no, it was super fun. But the one thing I'll say is, Masa really believes in his own ability, right? He met Jack Ma for 5 minutes and put $30 million in Alibaba that became worth $160 billion. So, pretty good investment. But then there were some others. I mean, people have seen the WeWork movie, which I'm not sure it totally fairly characterizes Masa, but, he basically met Adam Newman, was like, I like this guy. I'm going to plow money into his business. And so, sometimes it's very instinctual. I'm just glad it wasn't my instincts that had to choose them.
That's awesome. Cool. Well, the other question I was going to ask you is, what has been your biggest failure in this VC industry, and what did you learn from it?
Wow. That is a tough question because we did have some projects that were not successful, that we tried to help companies to scale or to get some kind of either regulatory change or something that would help their business. And what you realize is it's hard, and especially even when you feel like you have something that is very worthy. So in one case, for example, I mentioned earlier, we had a tax credit that would have had great environmental benefits. It would have helped the building industry. It would have done all these things, but convincing members of Congress. When there is a relatively finite number of dollars they're going to spend on tax provisions, was really hard. But it was also really disappointing because the company ended up not being successful in the long term. And we sort of realized that getting this tax credit was probably going to be the difference between them succeeding.
Success and failure. Yeah. Yeah, that's tough.
Yeah, and I was actually there early watching ByteDance, this now become this whole TikTok saga with President Trump. But I was there in 2018, 2019, watching at the beginning of this, and frankly recognizing, hey, this is going to become a big mess down the road, and watching as the train wreck has sort of happened over the course of time.
Oh my gosh, I would have loved to have been a fly on the wall during that time period.
Yeah, it's definitely fun.
What was I'm going to go off track a little bit, but it's just I'm thinking about all the experiences you've had, and maybe you've actually already mentioned this as an example, but what was your favorite company that you got to work with over that time period?
What was my favorite company? Well, so my kids thought that TikTok was the coolest one, but that's they just thought it was cool because that was one they used. So they, of course. What was my favorite? That is a tough question, actually, because we had a bunch that I thought were really neat and interesting. Watching GoPuff in the beginning was actually kind of fun because he was a bunch of college guys who basically started this business in Philadelphia, right? And then scaled it into a global company. We did a bunch. We had an Israeli cybersecurity company that was really building in the United States. That was also a lot of fun because it was right when the whole cybersecurity issue was really exploding. And these guys were really good. They were all former, Israeli military. They had all been in, Unit 8200, and they were like this just really interesting kind of fun company to watch grow. So I felt fortunate because I got to watch a whole bunch of them go from, relative and being in the, being in the investment calls to then watching us to make the investment to watch them grow. And I always tell the story about how I got my Whoop. I don't know if anybody wears a Whoop, it's like an Aura
Yeah,
ring.
of course.
But we're on the investment call talking about whether Softbank should invest in Whoop, and I Google it and I'm like, oh, what's this thing? I'm like, hey, that's pretty cool. I'd like to track my sleep, so I go online and order one. I'm like, we should invest in this company because I just bought one. So it seemed like a good bet to me. But
my husband wears it every day.
Oh,
yeah.
It becomes a lifestyle if you're into it.
It does.
But anyway, but it's I really felt fortunate to see these companies, particularly when we were doing the investments. And, Softbank would make big investments. It would take sort of companies that were scaling. Usually they were the leader in an industry, but then really help them to scale, sometimes successfully, sometimes unsuccessfully.
That's great. And how many companies do you think you worked with in total?
It's a really good question. Probably 20, maybe, out of the Vision funds, several hundred, maybe 20, probably 25. But I have to admit, I haven't thought about the number.
That's just really cool. I'd love to another episode, another day, going through some of those stories. I'm sure that would be very interesting.
There's definitely some interesting ones, that's for sure.
Yeah. And then the last question I wanted to ask you is, what's the best advice you've ever received? And this can be about venture or otherwise. You can choose your own adventure here.
I've been fortunate that I've actually received some good advice over the course of time. I think the best advice I ever got was be nice to everybody, because you never know when you're going to see people again. And the one thing, and I've been fortunate to have, a multitude of different careers over the course of my career doing different things. But the number of people I would meet in one place and then later I would come across them again. I mean, sometimes it was people who I met working on Capitol Hill who went out and built companies, right? Sometimes it was people I met when I first moved to Washington who were later in really senior roles in the U.S. government, and I was as well. But my joke with one of them was like, I really hope you don't remember what a knucklehead I was at 22. And she's like, oh yes, I do. I'm like, oh, that's too bad. Yeah. But what you realize in all these worlds, right? Whether it's the VC world, whether it's the government policy world, these are actually relatively small circles. So you really need to be nice to everybody. You need to treat people with respect because, someone once said to me related to this, remember the people you see on the way up are the people you're going to see on the way down. And I always laugh because, in Washington, the person who was your intern a couple of years ago could be a U.S. senator in a few years. So you really want to be nice to everybody and treat everybody as a friend.
No, I think that's great advice. And actually, it's one of my favorite sayings is we all start as strangers. Because you just never know, right? It could be anyone that you meet any day. Everyone you meet starts as a stranger, but you never know how impactful they're going to be on your life or the world around you, and you have to keep that in mind.
Have you ever read Byron Ween's lessons, his life lessons?
No, I haven't.
Okay, so
I add this to my list.
Google Byron, Byron. I think it's Wien. So he was the vice chairman at Blackstone. He's an amazing guy. He passed away a few years ago. But I was lucky that when I was the Commerce Deputy Secretary, Penny Pritzker, the then secretary, was good friends with him and introduced him. But he has these rules of life that you can find them online, and they're great and they're so thoughtful. I mean, I've given them to my kids to read. But one of them related to what you just said is when you first meet somebody, treat everybody as if they're going to be a friend because you never know when something is going to you're going to build a lifelong relationship with somebody. So it's a good
rule. Yeah, I mean, it could be your future spouse, it could be your business partner in the future, it could be any number of things. It could be your best friend. Yeah, it's just great to be open about that, and the more open you are, the more likely you are to find those people who are impactful in your life too. So. Cool. We're gonna have to link this Byron Veen book on this episode when we post it.
Oh, it's so good. He was this incredibly and hugely successful at Blackstone for many years. But just his distillation of life lessons, and he also would do this thing every year where he would make 10 predictions of things that are unlikely to happen but could happen, and he was actually often more right than he was wrong. It's really interesting.
Very interesting. Cool. Well, we're just about at time here, so I guess I wanted to ask you, any final thoughts, anything else you think would be worth sharing?
I don't even know where to start with that question. But, I guess the one thing I would say, and I tell everybody this, is, really be intentional about what you want to do and how you want to spend your time. Because I think there's so much stuff, especially as you get older, you realize there's so many things that you can distract yourself with and get caught up in, but figuring out what's really important and being really intentional, I think is so important.
I 100% agree with you. And that you saying that makes me feel very special that you're spending time on this episode with us here at K Street Capital. So thank you very much for doing that. And do you have any advice for people on how to do that? Because I think it is quite hard. I mean, I've spent my whole life trying to focus on trying to figure out how to be intentional about the path and the direction and the things that we're doing at the company and also myself personally. But it's tough.
Yeah, so I actually do. And it's interesting. So, I left Intel where I had been at the end of last year and decided to take a sabbatical, spend some time with my wife because she finished in the Biden administration. But then, I started thinking about what I want to do next. And a friend said to me something that I thought was very smart, which is he said, decide what it is you want to optimize it for in life. What's important to you? And for me, it's being part of an organization where I really believe in the mission. That's probably my number one thing. But I also think, working with good people, working for a great CEO, being part of a great culture. But think about, and it's for some people, it's just they want to make money, right? Everybody is a little different. But I think, being really intentional and thing is, what are the things you want to optimize for in life? And I would also put family on that list, although my girls are now in college, so it's a little bit easier. But really think about what it is that's important to you and then live your life in a way that you're optimizing for the things that are important.
Yeah, I think that's great advice. Well, with that, that's a wrap.